Hello, this is Daryl for Friday, the 6th of May 2016. We thank you so much for subscribing to our channel and watching our videos. So today, very good day for investors. It surprised some investors too because it closed in a positive today, and early on in the day it was trading negative, and the sentiment changed to positive, and we had a nice rally straight to the close, to close in the positive. So if you remember earlier in the week, I said when we got the job data that was leaked, that was supposed to be, that is going to be reported today, that was reported today, we said that it was negative, and yeah, it was. So it came in exactly as I said earlier in the week, that basically the U.S. economy added 160,000 jobs in April, which was less than the 200,000 jobs that the Wall Street economists and they expected to have. Also, what we had too was the unemployment rate held steady at 5%, which was missing the expectations from Wall Street for a drop of 4.9%. So unemployment, which is, you don't have less unemployment, right? So they were thinking it would go down to 4.9%, but instead it stayed at 5%. The jobs, instead of going to 200,000, they only had 160,000 jobs that was created. So in itself, that's bad. But investors knew that since earlier in the week, right? So when we heard that report today, it was just a confirmation of what we heard earlier in the week. So that is why the market was negative, because yeah, it confirmed the negativity that we had earlier in the week. But why did the market turn positive? Exactly why did the market turn positive and rally straight to the close? This is the reason why. This is a little bit of a education in economists or economy right now. So the market turned positive because of a simple factor. As the U.S. economy is getting closer to full employment, meaning that we're going to have the normal employment rate, right? Once we get in closer to the normal employment rate of the United States, what is going to start happening is there's going to be fewer job creation. There would also be fewer payroll gains, right? And that is what is starting to happen right now. And what is going to happen though, that is positive, is there's going to be higher gains in actual pay. So the actual pay is getting higher, but the actual creation of jobs is going to be less because it's getting closer to the full employment rate, right? So that is what we are starting to see happen, and actually the market factored that in after a while, and we started to see the nice rally. So what is now on everyone's minds, all investors, is does that signal then a rate hike in June when the Fed meets? Or because we had a not so positive report, that it really shows that the market still have weakness? So that's the big question that's that is playing out now, and we might see that play out right until June. We are right now past the halfway point of earnings season. We have 26 of the 30 jobs, 30 companies that are on the Dow Jones Industrial Average. 26 of them already gave their earnings report. So, it's only a number of them still to give their earnings report, and that shouldn't really affect the markets itself. So really, what we are looking now, at June, what the what the Fed is going to do in June, Janet Yellen and the Fed, and investors are now looking at that as how to trade. So interesting times, but we could have a nice rally continuing right now straight into June, and we would be here to break it down for you as it happens, right? Especially as we look at next week, straight from the weekend straight into next week, we are seeing only positivity on the radar. So we could see the rally continuing straight into next week. But we would be here to break it down for you at the DE Market Summary. So I'm Daryl, and this has been the DE Market Summary. You have a good weekend. Thank you.